Hi there, Vince Mohr here, your mortgage professional on the Central Coast, Central Valley, and beyond. And today in this video, I'll be talking about the all-in-one loan, or the smarter way to borrow. If you find these videos informative, please consider subscribing as I provide lots of good information regarding home loans, real estate, and the market in general on this channel. Last week, I was in a sales meeting and the presenter from a company, one of the lenders that I broker my loans to, had shared with us this product. And I'd never heard of it before, and they're the only lender in the country that offers it, and they have been doing so since 2005. But it's a product or a loan that they write in Europe, Western Europe, Canada, and Australia, and have been writing the loan or offering it for many years, even decades. But I was just blown away by how it works, and I was just so excited, as excited as that I've been in many, many years, if I've ever been this excited. So, but basically the way that it works, it combines your mortgage, your home loan with your personal banking, and loans on average are paying off in 12, 10, even as little years as 8 years. So, but the way that it works is that as deposits come in, it works just like a checking account or a savings. You have checks and ATM cards, etc. But as deposits come in, they're applied directly towards the principal. So principal is being paid first, not interest. So an example would be, let's say you had a $400,000 loan between a husband and wife. Their deposits amounted to $10,000. That would initially be applied, or at the beginning of the month, it would be applied directly towards the balance. So an interest is calculated nightly. So in this example, the interest would be calculated on $390,000, not $400,000. Then a few days go by, still $10,000 there, and then you start writing checks or spending, your normal spending habits, using writing checks or using an ATM card. And again, the interest is calculated nightly. It's the index that they use is the 1-month LIBOR, which is one of the stablest, or if not the stablest, index in the world. Since its inception in 1986, it's averaged a little less than 4%, where over that same period of time, Fannie Mae and Freddie Mac's 30-year fixed have averaged over 7%. Right now, the monthly LIBOR is a little under 2, and then they add a margin to the index, and they come up with the fully indexed interest rate, which they're again calculating on the outstanding balance nightly. So you start again writing checks using your ATM card, and over the course of the month, you've spent. Now, keep in mind, you don't have a mortgage payment. This is your mortgage. Over the course of the month, you've spent $8,000, and so now the balance is $398, and then it just and again the interest is being calculated each night, but then it starts all over again. $10,000 comes in deposits, applied directly onto the principal. Now we're at $388, and it just repeats itself. And like I mentioned, the average time that it takes to pay off with the mechanics of this loan, the average time that it takes to pay off, at least the examples that I've seen and the the examples that I've run myself, is about 12, 10, even as little as 8 years. So. And the premise is that if I said, what's a better loan, a 30-year fixed at 4% or a 15-year rate loan at 7%, a lot of people would say, well, the 30-year at 4% because it's a lower interest rate. Well, that's not necessarily the case. The 15-year loan would save you over $30,000 in interest, and it would, of course, pay off in 15 years rather than 30, so half the time. So the caveat is that most people can't afford the 15-year fixed payment, or don't want to get locked into that. So with this, your spending habits don't necessarily change. And the other thing about a 30-year fix is, you have to be into year 22 before you even, you've paid down half the balance of the loan. So It's not necessarily the interest rate and how low of an interest rate you can get. It's really how much interest you don't pay, how much principal you can pay down. So I'm extremely excited. Like I said, I don't know that I've ever been this excited about a loan product. I've included a link to talk. You can hear a little bit more about it. It's www.AIO Loan, singular loan is singular.net, AIO Loan.net, and there's a short 2-minute video that you can watch. And if it makes sense, then there's an actual simulator where you can put in your actual figures. So their motto is it's just math, it's not magic. So it's really kind of kangaroo court. You put the information in and they'll come back and say, we're going to save you $80,000 in interest and your loan's going to be paid off in 12 years. And or based on your spending habits, you're probably better off staying where you're at. So it's that simple. And then there's a few more short 1-minute videos you can watch. And then if you'd like to discuss it even further, you can give me a call or shoot me a text or an email, and we'll set up a time to get together. Thank you for taking the time to watch this video. And again, if you found the information informative, please consider subscribing, liking, or sharing. And if I could assist you again with the all-in-one loan or any home loan needs, please let me know. I wish you all the best.